What's going on, guys? It's Luke here, and today I wanted to make another video touching on order flow around my strategy and what I've been doing a little bit differently. And I just wanted to expand more into the higher time frame order flow. Now I'm talking more about the 4 hour, the 1 hour, and the 15-minute, and how I've been incorporating those, and not just the 5-minute order flow that I made the video on. If you haven't watched the videos that I've been making, check out all my trade recaps, check out the video I made on 5-minute order flow, and check out the video I made on my strategy. I will link those in the description. And this is just going to build off this more. So I want to make this a quick video. I'm probably only going to go over like 2 examples just to hammer home the point. And I don't want to overcomplicate it because it's a really simple topic and it's just building off what I talked about in the 5-minute order flow video, just on a higher time frame scale. So higher time frame order flow, okay, we're going to be talking about the 4 hour, the 1 hour, and the 15-minute, and we can incorporate those basically the same way as we incorporate the 5-minute order flow. So, well, I spelled that wrong, but whatever. So you're going to need an invalidation of a fair value gap to show the order flow shift. So in this case, we're looking at a shift from bearish to bullish. So we'd be invalidating a bearish fair value gap. If we're going from bullish to bearish, we'd be looking for an invalidation of a bullish fair value gap. Okay. Then to show continuation of the new order flow, we want to see a retest of a fair value gap or an inverse fair value gap to show the continuation. Okay. Then from there, we're going to scale down and we're going to look for higher time frame entries. Okay. Very simple. I have this example. I actually took this trade and it's in one of my trade recaps. I'm not sure which one. I think it's probably 2 back. I'll see if I can find it and link it. But starting from the higher time frame, this was a trade on ES. Okay, so on the 4 hour, we don't really have any order flow, but we do notice that we have a lot of low resistance liquidity. We have these untapped highs and these untapped highs if we're not looking at this candle, right? On the 1 hour, this is where we talk about the shift in order flow, and the higher the time frame and the shift in order flow, the more valid the trade's going to be, right? An hourly inverse fair value gap is going to hold a lot more than a 5-minute, right? So at this point, we have a pre-market sweep on liquidity. So in the pre-market, we came down and we swept out these lows right here, right? So from here, I'm anticipating for price to want to take out this, all this low resistance buy side liquidity, because this high hasn't been taken out. These are the Asian highs. These highs from the day before haven't been taken out. These highs haven't been taken out. So we took out liquidity. We took out sell side. We're anticipating to take out buy side, but we need confirmation to go up because price could easily continue to fall, right? Another thing that we can use is equilibrium. So we pull from the swing to the swing, we met equilibrium. So that's another good sign that price is probably going to want to continue up, right? But now we're talking about a shift in order flow. So in this example, we're talking about hourly, and it'll be 15-minute as well, you'll see. So we have this hourly bearish fair value gap right here. And obviously price, if it's going to reject from here, it's going to come down, right? We're going to anticipate bearish price to continue down. But instead, in this case, we get this strong bullish close above, invalidating not only this bearish fair value gap, but this bearish fair value gap. So we have both bearish fair value gaps invalidated. So this is showing us that price does not want to continue lower, and it probably wants to go up. But we need continuation confluence in order to be able to trade to the upside. We can't just like long this green candle. We need a better entry, right? Unless you're a higher time frame trader. But we invalidate those 2 bearish fair value gaps. So what we do is we want to mark out this one here or this one, and we're going to mark those out as inverse fair value gaps. So if price wants to come down and retest this will be a beautiful place to long because it invalidated the bearish fair value gap by closing above it. And if we retest it and it shows strengths and bullish pressure off that level, we're likely going to want to continue up and take out all of that buy side liquidity, right? So obviously we closed above this level. I mark it out as an inverse fair value gap. Price came down and tapped right into it. From here, I'm scaling down to the next time frame, which would be the 15-minute. On the 15-minute, as you can see, this level, we invalidated all these 15-minute fair value gaps after closing above them. And we came down, we swept out lower time frame liquidity, and we tapped into a 15-minute fair value gap. So as you can see, this was a 15-minute fair value gap. And this technically got inversed. So not only did we invalidate a bearish fair value gap and close above it on the 1 hour, we're retesting an inverse fair value gap on the 1 hour. We're retesting a 15-minute fair value gap. This is showing us the continuation after the invalidation. So this is showing us that higher time frame liquidity or higher time frame price action is shifting. The order flow is shifting from bearish to bullish. So from here, after we tap into this level, I'm going to be scaling down. On the 5-minute, we can see that price tapped into a 5-minute fair value gap. It's all the same thing, right? Price swept out liquidity. We're respecting a higher time frame inverse fair value gap. Bearish order flow got invalidated. Bullish order flow is getting respected. From here, I'm just looking for a 1-minute entry because the higher time frame, which is the 15-minute and the hourly, are showing me we're respecting bullish continuation. On the 5-minute, I don't need anything fancy, and same thing on the 1-minute. I scale down. All I do is I look for a break of structure, a fill of a fair value gap, and a bullish close. We don't even need to wait for this to get invalidated. We could just take it because we have those higher time frames confirming order flow is shifting. And from here, you could just target all of this low resistance buy side liquidity, and you would have made or hit about a 3-hour trade if you just targeted this up here. Once again, to recap, we have a higher time frame liquidity sweep. We're meeting higher time frame equilibrium. We closed above a bearish fair value gap and a second bearish fair value gap, showing us that bearish order flow on the higher time frame is getting invalidated. We came down, we tested an inverse fair value gap, retesting it, showing continuation on the 15 and the 5-minute. We're respecting fair value gap after that lower time frame sweep on liquidity, showing us continuation after the invalidation. And on the 1-minute, we just look for a simple entry and target buy side liquidity. So the most important things to take away is we're using the same concepts from the 5-minute order flow video, but we're just looking for an invalidation of the opposing order flow and looking for continuation. But the higher the time frame, the more valid it's going to be. So that's going to wrap up the example number 1. Let's get into the second example. All right, guys, so second and final example. I only want to do 2 examples really on this video because the point still stands. Like, I hate those videos where they show like 30 examples and they just confuse you. Like, the point is going to stand. It's just order flow. Like, it's a pretty simple concept. So I'll try to make more videos on it and talk about it throughout all my trade recaps. But I just want to go through these examples because I find they show them the best. Now, this trade does not provide us with the best risk reward. This is actually a trade that I took. I closed this one out a little bit early. My stop loss placement was different, but it's just to show you the point, okay? So this one was on NQ. So on the 4-hour, right? Let's start from the 4-hour. We see that the 4-hour is respecting this bullish imbalance. We haven't closed below it. So that's a good sign for us. That's showing us that price is going to, as long as it's respecting this imbalance, it's likely going to want to continue up. Now we scale down to the 1-hour. Okay, so in the pre-market, we did have this sweep of liquidity of these 1-hour lows right here, right? So we came down and we swept out these lows in the pre-market, but this isn't really what we're looking at in this trade. Basically, we're looking at this invalidation right here. This is the important part. So at the end of the day, we have the 4-hour that's holding that fair value gap. So we're anticipating that price is going to come up and take out, the London highs over here and the Asian highs because those session highs are strong draws on liquidity. But this is the point where the higher time frame order flow shift and the invalidation to continuation occurs. We have this bearish fair value gap right here. So if price wants to continue bearish, it's going to tap into this area and it's going to continue down. But in this case, we get this strong bullish close above. This is the 8 o'clock candle. So we close above this hourly fair value gap, this bearish fair value gap, invalidating it. So we are invalidating bearish order flow on the higher time frame. In this case, it's the 1-hour. Same thing will stand on the 4-hour and the 15-minute. From there, after we invalidate the bearish order flow, what do we want to see? We want to see a continuation confluence of the bullish order flow. So in this case, we mark this out, this fair value gap. So when price comes down and retests it like it does right here in the 9 o'clock candle, this becomes an inverse fair value gap. So now it's showing that not only did price disrespect this bearish fair value gap, it's respecting it as a inverse fair value gap, which is showing that the shift is going from bearish to bullish on the higher time frame. And if the higher time frame bias is shifting to bullish, the lower time frame is going to follow, and we're likely going to be going up to take out these session highs. So after price tapped into this level, I'm looking for longs. We scale to the 15-minute, okay? On the 15-minute, we have it's the same thing. We have an inverse fair value gap. We have a 15-minute fair value gap as well, and we're failing to close below it. We have this strong push to the upside. And then from here, I'm saying, okay, we're holding this inverse fair value gap on the higher time frame. We invalidated the bearish fair value gap. I'm looking for longs. I just need confirmation. So then I scaled to the 5-minute, which is the next time frame down. On the 5-minute, we formed a bullish fair value gap right here. So we have this gap between these two candles right here. Price came in. We had this long wick to the downside, but we failed to close below it. So we're still showing that we're respecting bullish order flow. So we have the higher time frame continuation. We have the 5-minute continuation. Now we just scaled to the 1-minute and we look for an entry. It's that simple. So on the 1-minute, we are holding this bullish fair value gap on the 5-minute. We get this close above. We form a 1-minute fair value gap right here, an inverse and a 1-minute fair value gap. I entered on the bottom wick right here, but you can enter right here, same thing. And you take this up to the London and Asian highs, stop below. Obviously, I closed it out right here or something like that. But if you held it, you still would have hit take profit. A very small risk reward, but this point and the example just shows how this works, okay? Again, starting from the top, starting from the 4-hour, and you work your way down. 4 hours respecting a bullish fair value gap. The 1 hour swept out liquidity in the pre-market, but that's not our main concern. We're looking for the invalidation to the continuation. We invalidate this bearish fair value gap by what? Closing above it. We come back and retest it. So now it's showing that bearish order flow is being disrespected and bullish order flow is being respected because we're retesting this as an inverse. 15-minute is showing the exact same thing. Inverse respecting a 15-minute fair value gap. 5-minute respecting a fair value gap, showing that it's failing to close below. Likely we're going to push up. And on the 1-minute, basically the same concept again. We fill this fair value gap in right here. We inverse it. We get a bullish close. Stops wherever you want. If you put them below this wick, and then you target the session highs. And that's pretty much it, guys. You just look for basically an invalidation of the opposing order flow, and you're looking for a continuation confluence to the order flow of the trade that you're looking for. So in this case, we looked for an invalidation of bearish order flow, and we looked for continuations of bullish order flow on the higher time frames. So we're not just doing the 5-minute, we are incorporating from the 4-hour to the 1 hour to the 15 to the 5, and then to the 1 for your entry. So you're working your way down. But that's going to wrap up this video, guys. I just wanted to go through those two examples, not trying to overcomplicate anything. I hope you guys enjoyed the video. I'll have more videos coming out like this, more educational videos to come very soon, and more trade recaps coming this week. That's going to wrap it up for me, though, guys. I hope you guys enjoyed. Give me a like, subscribe, comment on the video, follow me on Twitter, and I'll see you guys in the next video. Peace.